of my process is price and events and price. Our last podcast, I was looking for 90, 96.60 in the euro. I was looking at for 10, what was it, 103.85 in the British pounds.
Mm-hmm.
And I was looking for this spike in here in the 30-year bonds to reject. Now these are 4-decade levels. These are life of contract levels. This is a Plaza Accord retrace in the yen. That is the life of yen futures. This is the life of the British pounds.
Generational change.
Okay. Now, when we get to the numbers like this, they're absolutely a free out. Everybody's been long dollars. You get out of your short bonds. These are 98%, they do not follow through at a level like this. And as a matter of fact, when they get to a big multi-decade number like that, they'll come all the way back on the Fibonacci work, and they'll try to go back to the next major fib, which you've already seen in the yen. That's 150 to 127.5 in dollar yen. The euro is already rallied 10%, 12%. So it's already done its move from fib to fib. It doesn't really have to go much higher. As a matter of fact, that around 109.5 to 110.5, I'm looking for it to reject again. And the bonds, this is the half of the life of bond futures. And I use the futures because the yield charts don't line up quite as well as this does. But when you get all the major currencies and the major bond market in the world all doing the same thing at the same time, at the same moment in time, there's a huge sea change happening. And we've seen it. And these are the type of long-term work that I like to follow. I know Ira follows it. The story always changes after the chart changes. The chart changed. Now the story's starting to change. So what's the lagging indicator are the fundamentals, because they're basically what I think is unknown. The price is known. The fundamentals, or the real fundamentals, aren't all the time because the numbers are lagging. And so we've been having this discussion all last year in the room that at some point, the currencies and the bonds were going to start running the equities. The equities are now the smelly end of the dog. It's the currencies and the bond markets that are moving everything else. And people haven't seen that. You know, this is something that you saw in the 80s and 90s. You know, people that are new to trading have no concept of this. And they've never seen the volatility in the currency markets. And today was just one more day where, you know, the dollar went up as the bonds went down. And as soon as the bonds found some footing and went the other way, everything turned around and went the other way with it. So the algos are all in tune with it right now.